So I have been looking at uranium for almost 2 years. I think it was 2015 or 2016 that I started thinking about it as an investment because I read some articles which, to be fair, are kind of similar to the articles that I'm reading now. But it still seems to be an opportunity. It's still a speculative play. A few people that I know have been kind of interested, and I'm not saying that I'm an expert, far from it. I haven't done the fundamental analysis of a lot of these companies that I'm reading up on, and that's kind of the next step. So I thought I'd kind of gather all my thoughts and see how it works in a long form, and just talk about the things that I've found, the articles that I've found, my kind of takeaway from it, and ultimately my plan, which I think you guys will like. So without any further ado, let's get into it. So, my original view on uranium was that it kind of just got completely wrecked since 2011 when Fukushima went down. A lot of reactors got shut down in response to that, especially in Japan, which are only just coming online again, or have applications for coming online again. Germany, I think in response, closed down some nuclear reactors, which I guess was due to safety concerns. And a lot of Western green nations made these ridiculous statements to reduce their reliance on nuclear fuel. I think France said it was going to go from 75% reliance to 50%, which doesn't really seem to make any sense, especially from if you believe in this carbon emissions and this global warming and this kind of green agenda, because it's actually very, apart from obviously the nuclear waste, it's very... Basically, there's no carbon emissions from this, so it's much more efficient than the wind or solar, which just seems like a complete joke to me right now. And what's the alternative for someone like Germany? They have been they've been importing the power from France, and then on top of that, they've been burning coal, which is very unfriendly from an environmental standpoint. So there was that. And overall, it went through its own bubble, so it's been in a bear market. We'll talk a little bit more about where the prices are, but on the plus side, you have things like the amount of reactors being built. Now, this is something which really bothers me, is that as I've been reading, is that there's all these like great numbers about, hey, these reactors are being built, but if you look at the outlay to build a reactor, we're talking hundreds of millions of dollars, and as a percentage of the actual outlay for a reactor, the uranium is, I think it's less than 1%. It's certainly no more than 2%. So, in reality, if the uranium price were to triple from here, it wouldn't really make a difference. So from a kind of a demand side, it's definitely there. But you've got things like, even with Japan bringing reactors online, they've still got a huge stockpile, which I think they've been selling into the market, if what I've read is true. You've got a huge kind of stockpile still available. And you've got the major producers still producing, like Kazatomprom, which is the biggest producer, which is in Kazakhstan. And you also have Cameco, which is a Canadian company. Which those are kind of two biggest producers. So I think a bear market can actually last longer than a lot of people realize. That being said, there was something that supposedly, this is I haven't looked into this outside of the few articles that I read, there were supposedly 400 uranium producers in the last bubble, which went up from a very, very small amount. I think it was somewhere between 20 and 40. But now we're back down to around 40 producers that are actually still in business. And the charts really, really tell that story when you look at some of the companies that I've been looking into. Now, a lot of these companies that I've been looking into, I've been trying to make sure that I can trade them because I'm a European citizen. So up until a lot of these guys, they provide the KID documents, I can't actually trade them. It's so a good example of the bull market. Let's look at Paladin. Now, Paladin's really interesting because it went from I think a couple of cents in the original bull market. I'm just going to refresh this here. So it's taking its sweet time. It went from a couple of cents to something ridiculous like $6 or $7, I believe, or was it $10? This is taking a while to load. Here we go. Yeah, $11. Let's call it $11, but 1087. Computer is slow right now. Should probably restart it. So this is the weekly. Let's check that out. So it went from the low. Let's check that out. What was the low? Let's just call it a few cents. It doesn't really matter, because then you had this crazy run up. Honestly, this looks a lot like Bitcoin in a way. It's a textbook bubble, and then it's just dead. It really is. It's let's put some log, and it even flash crashed down to less than a cent. If that's a real price that actually got. Let's say that the low was about 1 cent. And then from here, there's been some positive news this year, and we had a high of about 50 cents. So that's kind of like, it's a penny stock, and it acts like a penny stock. But Paladin is something which I'm interested in. I'm not entirely convinced that it's a very reliable one. But what I'm primarily looking at is what are the companies that are around now, and can they survive another few years? Because that's another thing which I found out about uranium, is that there is a lead time. There's a lead time on the demand. So that's about 3 or 4 years. So if we have that much stockpiled already, then it should be around this year or next year that we'll really see a little bit more movement in the prices of uranium. So I mean, this is a little bit rambling, but these are my thoughts. So I've actually wrote up a bunch of notes on all of the aspects of uranium that I'm kind of interested in. This isn't really finished. It will be when I post this video, and I'll talk about the stocks that I'm interested in. So I will say that I was interested in uranium back last year, and I picked up the URA, or the URA, which is the uranium ETF, which is, I think, about 10% invested in Cameco, and the rest, I think, it's got exposure to a lot of penny stocks. I can't actually trade this anymore, so I think I bought it around here, I think. So it was close to the bottom, so I got lucky, and I was feeling like a genius, and I'm holding this for the long term, and I actually ended up selling a little bit into these rallies, and then finding out that I can't buy it back. So I've got a position that I plan on holding in this uranium ETF, so that's kind of my disclosure. This is the only position. I do have 1 share of Cameco because I was testing my trading platform, because since the beginning of this year, if you don't know, if you're a European citizen, any ETF that trades has to provide a KID document, and if it doesn't, then you can't trade it. So I was just testing if I could even trade some of these stocks. So I own 1 share of Cameco, and I own like a small position in the uranium ETF, URA. So yeah, back in 2016 I was looking at this, and I think even in 2015 I was interested in uranium. And then a website that I was subscribed to at the time, there is a guy that does some nice analysis that that got me interested in uranium again, and he mentioned a couple of ETFs. One lower risk, which I don't remember the name of, which is I think mainly exposed to larger caps, which I expect would also be Cameco and other miners. And then he mentioned URA, which I got interested in, and they did okay, and I think it's as good as a longer term hold. And then I just started going down the rabbit hole and reading a lot. And you can see a lot of these articles. And then you can kind of get, if you read through these, you can kind of get familiar with the big players. You can kind of look at what I would consider bullshit, which is something like Palisade Research. Now these guys, you can come across articles like this, but these guys will write things at the request of penny stocks, of these companies that are trying to drum up value. And if you actually look at the disclaimer, you can see this. And maybe they're not scammers, but anyone that's doing this for a benefit of getting some kind of shares, or making calls beforehand to try and generate volume, I just stay away from that. So if these guys recommending anything, I would be very skeptical, and I would not put much stock. I would not put much of a percentage of position in it, because a lot of these, it's always good to remember, a lot of these companies are very speculative, and they could just disappear. So I have like a bunch of notes. So I've in this kind of text, which I'll link, there's all these links that you can read through. There aren't actually as many as I probably have read, but after coming back to this, I just kind of went on a little binge at the weekend to try and get a better feel for it. And my takeaways are kind of this. I do see a lot of the same things being repeated that I read in 2015 and 2016, talking about demand and supply, new reactors. There's one guy that I follow called Mark DeMaisel, who is a YouTuber, a crypto YouTuber, that is convinced that we're in a continual commodities bear market. So he's not interested in uranium now after his research, and I respect him a lot. And I think since it is a speculative play, it still could be worth it. So, but it's worth checking him out because he is one of the few people that I've seen that is actually bearish. And I couldn't, just doing like a surface search, I couldn't find much bearish information. And when you look at a chart like this, I mean, it's hard to be bearish when we're at kind of multi-year lows still. And that can exist, not perpetually, but for a very long time. So a lot of other take-homes is that the bear market could be over because we're at multi-year lows. A lot of guys got wrecked. A lot of guys have gone out of business. Mines are being shuttered. They're not being shut down, but a lot of them being put in maintenance by the big guys because it's easier to put in maintenance and bring back online than it is to completely shut up a mine. A lot of the articles that I've seen say that stored supply is dwindling. I'm not entirely convinced of this. It just seems like there is a huge oversupply. You've got the larger players still supplying. What is interesting, which I'll mention later on, is that people, from what I've read, companies like Cameco are actually buying supply on the open market to fulfill their obligations, which to me is crazy. So those guys basically are going, we're not mining this at a loss, but we're going to buy it from people who are. So that's obviously very clever. And obviously something to keep in mind is that there is like a lag of 3 or 4 years. So that's probably why the bear market has lasted so long, is because there has been a huge oversupply due to the bubble, which is completely normal. And this one I find the most interesting. A lot of uranium producers got completely wrecked. From the bubble, there was something like 400 or 500, and now there, from what I read, I'd say there's probably 40. I would err on the higher end of this. A lot of people are saying there's only 20 left, like Palisade. And that's another reason why I don't trust Palisade, because it just seems like from a very easily searchable amount of information, they choose to make it sound even more dire, just to make it sound even that more hyperbolic. So, yeah, so that's an interesting point. The world is building more reactors. I think that's undeniable. And I mentioned this before, Japan is slowly bringing online. Germany will have to bring theirs back online, and the same with France. And that's ultimately a good thing, but I wouldn't use that as a huge point, because like I said, the outlay of these reactors is not for the actual uranium they need, isn't that much. Japan supposedly has a lot stockpiled, and it would do, because it shut down its reactors, and I don't know if they've actually been selling that onto the open market, but that is something to keep in mind. So there is, on the plus side, so there's major building going on in India and China. You can find those numbers. Whether they're accurate or not, it would require quite a little bit more research. Other pluses, which I don't consider would put much demand currently on the uranium market, is Trump is apparently pro-nuclear, and that's showed in some tweets. So that's not a bad thing, but I don't know how much upward pressure that would really exert. The main one that I'm most interested in is that one of the main ones, is that we're under the cost of production. Now, this is a pretty big deal, but if you've got any experience of commodities markets, that you can be under cost of production for a long time, longer than you'd think. So, I mean, if this gold and silver bugs are to be believed, we've been under cost of production for, I don't know how many years. What was it, 2012? So 6 years under cost of production now. That just means the market will start liquidating, and the bigger players will get into a better position and survive. But maybe it's better to be too early than too late in this case. Now, another thing to keep in mind, that guys like Cameco are able to keep functioning because they have fixed contracts. So even if they're mining at a loss, they still have a fixed price that they're selling at. But those will expire soon if they haven't already expired. And like I mentioned earlier, is that right now the uranium is so cheap, Cameco are buying it on the open market. And if that's true, that's crazy, right? It's rather than using your own mines, you're just wrecking other guys that are just desperately trying to hang on. So that's a good business practice. And I've seen a lot of people talking about the inflection point because of the lead on the supply, which we kind of covered already. And what I actually found really good in one of the links, if you only check out one thing, it's a really long read, but it was some of the best information that I read. And I'm not a huge fan of Rick Rule and Sprott Asset Management. I don't understand what they do. I used to hear them a lot on all these gold and silver bug channels. They're not holders. They are managers. They are investors. So this guy, I think, actually gives you a very nicely unbiased view of the uranium market, and it had some cool questions, which talks about the supply. So when you're talking about the oversupply taking a while to unwind, what can we expect? And this guy says, it's an interesting question. I'm too old and smart to answer it directly. So this guy doesn't even really know. So you have all of these guys on the internet saying that supposedly that the bear market's over, bull market's here. But this guy who's been in the business for I don't know how many decades is going, I don't know. I don't have any idea when the oversupply unwinds. The leading indicator will be Japanese restarts. So there is that. If we see that in 9 months from now, the overhang in the market is gone. Until we see that, the overhang will remain. So I think it's kind of anyone's call. I mean, these guys have got a lot of experience, and this was on a call to their members, their investors, who were subscribed to their services. So this is why I'll talk about my actual allocation. I do think there's a lot of information here if you care to listen. And so my takeaway was that it could be a good bull run, but you're looking pretty long term, at least if you come from crypto, which is 5 years plus. And we've had a run-up lately from some good news, but if you read the Sprott interview, a lot of these juniors could just go straight back down because the bull market might not really be having begun yet. So, and also I feel like this is this whole uranium speculation arena is an echo chamber. I don't see very balanced. I don't see people making the bear case, which it's frustrating because I would like to see more information. So there is that, and then there was an interesting post here from a Dutch, I think a fund manager or something like that. He had a cool quote at the end. You can check that out if you're interested. My allocation for this is super speculative. I don't believe I really understand the market. So I made a little spreadsheet with the stock, the percentage that I intend to invest, and this will give you calculates the amount based upon the percentage, and also I give it a little risk label here. So I mean you can do this with 100, 1,000, or as much as whatever you want, and it will give you an idea of what you would want to put in depending on the percentages that you set here. So obviously the very high risk ones I'm choosing to do a very low percentage, and actually as a percentage my investment in these assets or these stocks will not be more than 2% of my total assets, or my net worth, or however you want to call that, because honestly I'm still skeptical of the sector. I think a bear market can go on longer than many people think. And when you've got one of the biggest players, which is Kazatomprom, which I didn't speak very much about, but it's a huge Asian state, which is something like, I think it's 10% of the world's uranium supply, or 20%, it's a significant amount. And that's state-owned up until the end of this year, where they're doing an initial offering. But I'm not so sure you can predict that, and also you can't predict things like recently the current administration in the US was talking about suspending imports of uranium, or at least regulating them further, so that can have an effect. There are lots of kind of wild cards out there. So that's how I'm choosing to at least calculate what I'm going to invest. So in addition to doing this, I need to do fundamental analysis of the stock, and that doesn't mean just listening to some interviews. That means actually going to look at the balance sheets of the companies and seeing if they seeing what kind of state they are in, and obviously reading about these companies and listening to interviews isn't the only thing. Along with fundamental analysis, I want to look at the chart. So you can look at Euro, which is the ETF, which is kind of mid-range risk. So you can see here, this thing has been destroyed. It's just really, really very dead. And I'm interested in it because through a number of the indicators that I use, however you feel about certain indicators, it doesn't matter. You choose your own metrics, and I'm seeing that this looks like very bottomy to me. I mean, sure, the ass could fall out of it and it could go even lower than I think 1144, but I like the way this looks for a number of reasons, and I'm looking at that, and there are some other stocks. Let's take a look. So they've got the Cameco. Cameco, I think, is a kind of similar deal. It's looking again, a lot of distribution happening around here. So I'm not looking at something like, let me see if I can find one. This guy, Deep Yellow. I'm not thinking, obviously this is a penny stock, but I'm not thinking, damn, that's really good. It's had a huge pump at the beginning of the year. But I mean, again, this is all based on your own opinions, your analysis, technical or fundamental. Overall, the idea is that I'm giving myself a lot of exposure to the industry through a number of, I don't know, fairly risky players, apart from maybe Cameco. There's NLR as well. Let's take a look at that. Another ETF. Don't know what that's doing there. Again, yeah, very similar. It's looks like it's kind of in a channel at the moment. So that's how I'm choosing what. Obviously, in addition to everything that I've read, that's how I'm choosing where to put my money. And if you're interested in how I am selecting this and the indicators that I use, I'll make another video about that, because this is running way too long already. And full disclosure, I will be putting my money in a bunch of these stocks, and probably some that I haven't even covered in this video. So I wanted to end the video with something, with a contribution to this whole conversation, with something which I haven't seen anyone even talk about. This is something which you can do. You can get in touch with these companies. So I did that. I kept on, as you will remember from some of the notes, I heard about this Cameco buying inventory to fulfill their contractual obligations. So I thought to myself, well, that's an interesting idea. So it should be verifiable, and I'm going to go directly to them. I'm not going to take it second hand. So I sent them an email. They're a big company, and they got back to me real fast. And this is what they said. To tell you what I asked them, I said to them, I've been reading that you are doing exactly what these guys are saying, that you are buying on the open market to fulfill your contractual obligations. And they got back to me very fast, saying, thank you for your email. Cameco is always active in the market when it makes sense. Having said that, this year we suspended production for 10 months at our MacArthur River Key Lake operation, which results in us having £13 million less of production in 2018, £80 million removed from the market, including Orano's share. Part of the rationale for the suspension was to allow us to draw down excess inventory to achieve our desired working level, which is still our intent. We had built up some excess inventory to mitigate risks, and as we are ramping up production at our Cigar Lake mine. However, the ramp-up went better than expected, and we found ourselves with excess inventory. That inventory ties up cash on our balance sheet and creates an overhang in the market, so we decided to mobilize it, which I assume they mean they decided to put it on sale. We have, and they go on to explain this a little bit more, we have 3 levers that we can use to meet our delivery sales commitments, those being production, inventory, and purchases. Given our expected 2018 production, delivery commitments, and the material we have agreed to loan Orano up to £5.4 million, we expect we may need to make some market purchase over and above our production and excess inventory in order to meet our commitments. So it's not that we aren't using our production inventory to meet our sales commitments, it is that with MacArthur River Key Lake on suspension, we may need to make some purchases over and above that to meet our commitments and maintain our desired working inventory levels. So very nice reply. Thank you very much, Rachel. Or Shell. I'm not sure. That is interesting because that kind of contradicts what you will largely see online. So they're kind of, I mean, it's not it's not a significant commitment on this reply, but they are at least detailing what's going on. So to me, it seems like they have the inventory and they may need to buy it on the open market. And so it kind of confirms that they at least are considering this and they may need to do it, but they are not doing it, at least as far as this year is concerned. Maybe they did that in previous years. So I do encourage you, if you're interested in this space, to actually go and talk to these guys, or phone them up, email them, and that's all I got, guys. I really hope that you got a lot out of this kind of little video that I made. It was also to get my thoughts straight, because when you read so much information and you try and learn a lot about the market, it's easy to forget about it, because that's I was doing this on and off since 2016, really, looking into it, reading a little bit, and then forgetting a lot of these so-called facts that are kind of proliferated throughout these articles and interviews. And it's a way to bring it all in one place, and like I said, get my head straight, and now I can go back and I can listen to this, and I can be reminded of all the reasons why that I'm interested in this, or at least the story makes sense. And that's what it is. It really is. It's a story. It's a narrative that you're choosing to be a part of. And I've also recently listened to quite an interesting interview from a guy who owns a majority share in I think an ETF, or is an advisor. So he's got a vested interest, but that's at the very bottom of my notes. That was quite an interesting interview, because this video has been made over the course of about a week and a half, so the dates may have changed, the stock prices may have changed, and that's all I got. Like I said, hope you enjoy it. See you next video. And if you're interested in my notes, I will link it at the bottom of the video, and the notes will contain the list of a lot of stocks that I'm interested in, all of the links, everything that I've read, and much more than I probably described in this video. Thanks.